Hi there, I'm Kristen Cooper, and I'm joined this morning by Russell Lamberti, Chief Strategist at ETM Analytics in South Africa. Over the next week, Stratfor will be publishing a series of analysis written by ETM covering their views on the global macroeconomic trends in 2016. I've had the chance to read your series, and I would like to take this opportunity to ask you to discuss a few of your main analytical concepts as an introduction. To begin with, you attribute the structure of today's global economy to the concept of America's exorbitant privilege. Can you explain this concept and how it contributes to the current financial instability?
Well, it's a great question. I think to take a quick step back, I think we have to realize that the post-1971 global monetary system is a system of nationalized fiat currencies. In other words, you've got, 100 or 200 currencies that are essentially competing with each other on a global basis, and you've got the ability of nation states to control their currencies for various geostrategic purposes and various national interest, for their national interest. And essentially what that means is that countries can use monetary policy, can use money printing to kind of make a grab for global resources. So in a way, you have a system that's designed as a kind of tragedy of the commons, where you have the commons being global resources and countries with centralized, nationally controlled currencies making a grab for those resources. And that's essentially the essence of what currency wars are all about. America happens to sit at the apex of that system. It is the global reserve currency. It's the chief in charge. And as a result, has the greatest ability to use its currency to extract global resources, to purchase living standard. And it effectively earned that privilege by being the most powerful country in the world after World War II, really, and was in pole position for the Bretton Woods negotiations that then followed. When the gold window was closed in 1971, America then spent the next decade trying to reinforce its position as at the helm of the global currency system. So America really leads a system that is essentially that adheres towards instability, because you have currency as a tool of national interest and currency as a tool of resource extraction, as opposed to the days of the gold standard, where by and large gold as an apolitical, non-nationalized global numeraire was a far more, I think, stable currency system, and didn't adhere towards the kind of instability that we see on the globe in the global financial system today.
Another major theme in the series is the Chinese economic slowdown. How do you see China's slowing economy affecting its geostrategic interests?
Well, I think basically China just is going to have far less ability to project power than people had originally thought. It is clearly a powerful nation. It's at this stage probably the second biggest economy in the world, although a large quantity of its GDP growth and its economic expansion over the last 10 to 20 years has been of a relatively poor quality in many respects. China has spent a lot of time and effort misallocating capital. It's tried to accelerate the development process and leapfrog the ordinary conventional development channels, and in doing so, I think has created systemic fragility in its financial system, fragility in its currency system. So as China tries, as it's trying to look outward, it's going to increasingly be consumed by inward concerns of financial stability and then internal political stability. So Beijing hasn't really figured out a way to create a sustainable, long-term, stable economy and stable financial system without tremendous degree of internal control. And that, of course, takes up a lot of resources focusing internally. So it's going to be very difficult for China to look outward and to project power outward. It, of course, will still do that, and it will still have a very critical role to play in Eurasia and in Trans-Pacific politics. But it's going to be increasingly consumed over the next decade by trying to manage internal financial and economic instability.
Finally, you describe Washington's response to the 2008 financial crisis as America's grand gamble, concluding that if this gamble fails, the global financial system could experience a profound and unstable transition. Can you expand a little bit on what you envision in such a scenario?
Well, for at least 20 years now, and possibly more, what we've seen from Washington is a kind of doubling down on particular model of growth that hasn't really proved terribly successful over the last number of years. So that model of growth is based on loose monetary conditions, excessively low interest rates, and rapid expansion of the federal debt and deficits. And of course, encouraging as a result big corporate and household credit expansion as well. That system appears to have run its course. It hit a big speed bump in 2000, 2001. Interest rates were lowered dramatically. The national debt was expanded significantly, and that hit another huge speed bump in 2008. And all that's really happened since then is Washington has kind of doubled down on those policies. Now, that creates a kind of structural instability in the dollar, in markets, investors' perceptions of U.S. solvency as a sovereign debtor, and being at the apex and the helm of the global currency system means that the currency off which everything else hinges and is priced is inherently unstable. What we've seen since 2008 is zero interest rate policy, a huge expansion of federal debt. And all that really does is just double down on the growth model of previous cycles. And what it's delivering is very slow growth, a very weak expansion, and arguably numerous bubbles that have reinflated. And the biggest one of all probably being the bond market bubble itself. With interest rates as low as they are, we're in a multi-decade bubble on bonds. This is all creating a very precarious situation, not only for the United States, but arguably even worse for the rest of the world, because the US is at the apex of the global monetary system, and American stability is key to global financial stability.
Thank you, Russell, for sharing your insights. We're looking forward to publishing the series next week. And thank you for joining us.
Thanks, Kristen. It's been great to talk. Thank you.